When we talk about the markets on a daily basis, we talk about just how tough things are within the markets today, in particular when you look on the equities side. How difficult is it?
It's very difficult, Godfrey. It's very, very difficult indeed. The reality of the situation is that markets don't go up in a straight line, nor do they go down in a straight line. So for asset managers like us, our challenge is to pick the stocks that have value over the, that will realize value over time, and give value to our clients. So it's difficult, but our challenge is the clients pay us to manage money, and we have to manage money through good times and through bad times.
Absolutely. When you look back in history, do you see a time when things were as difficult as we are?
Well, 2008 wasn't easy. 2008 wasn't easy.
Yeah.
It's not easy in 2018. It's all relative, and different factors, both locally and internationally, play on markets. But it certainly is a very, very tough spot, locally and internationally. Godfrey, it's not just local equity markets that are tough. Internationally, markets are very tough too.
Unless if you are in the US.
Yeah, well, they've done better. They've done better than other economies. But still, markets are tough worldwide, and especially we're reporting results end of September. October was particularly tough.
Absolutely. Let's look through the business, and in terms of your segmental reporting, and I see there were some good spots where you had earnings up. You're looking at annuity earnings up 15%, and also you're looking, on the other hand, you're looking at the performance variable, what you're calling variable, and fee-based earnings down 67%.
Yes.
So sort of like a mismatch.
So we are an asset management business, earning fees both from management fees and from performance fees. So what you'd want to see is strong growth in annuity earnings. Okay. We have seen that. Our Citadel, our wealth management business, Citadel did particularly well, up 21% year on year.
Right.
Good revenue growth, good cost containment, good performance in the assets managed over there. That manifested itself in some nice results. We've had mixed results in others. Our asset management business, primarily our hedge fund business, has performed less well.
Sure.
On the back of industry-wide redemptions out of the hedge fund business and tough markets. That's a business that really gets more out of performance fees. And the significant drop in performance fees in that business has overall had a bit of an impact.
How bad has that been bleeding within the hedge fund industry? And what are the trends?
Anecdotally, one hears that the hedge fund industry over the last 18 months have lost about 40% of its assets.
Sure.
Could be, maybe a little bit more, maybe a little bit less. But it is certainly an industry which has taken pain over the last 18 months.
Sure. And we're likely to see more pain?
I'd like to think we're at the end of it, but one doesn't really know for sure. But we've certainly taken significant pain as an industry, as a hedge fund industry.
Fund managers speak a lot about diversification, and it looks like diversification has come to the rescue a little bit here, because your overseas business is certainly much better. 15% earnings contribution from 38.
Yes. So our offshore businesses have done well. Our asset management business continues to do well in a tough environment. Our trust businesses, also are doing solid returns. Godfrey, it needs to be noted that we did get a once-off exit fee on performance in our offshore business to the tune of close to 60 million rand, which is helping earnings. But if you look at our core businesses offshore, our asset management, our trust businesses, both are up and both are doing well. We're well satisfied with them.
Absolutely. You spoke earlier about redemptions, and I wanted to return a little bit and talk about assets under management, because I see you were able actually to grow assets under management in this environment. How so?
Yes. So just remember, we've got 3 or 4 big business units that are contributing. So it's not the same story across the group. Citadel managed to grow assets. Our Stenham asset management business offshore grew assets.
Right.
Our hedge fund business lost assets. It's an industry-wide trend.
Sure.
And some of our smaller associates maintained assets. So it's mixed results with different reasons. And the positive is that we are getting inflows into all our funds.
Right. And
the redemptions are moderating.
Absolutely. That's what I was going to ask about redemptions within that overall sense. How are things looking up?
Moderating. So we have had, as I said to you, significant redemptions out of the hedge fund. But that's moderating. And the other businesses, we're in a net flow position. So
Right.
we're strong on that side.
Yeah, it's almost like you feel like you want to tell people when the markets are under pressure, it's not the time to be exiting because you are exiting at the lowest point.
Without a doubt. You know, there are two emotions that drive markets, fear and greed.
Yeah,
Now, with markets being where they are,
yeah.
fear grips the market, and it's the wrong time to exit markets.
And who's exiting? Are these retail investors? Because you tend to think they are the ones who are not very well, versed in the markets and when to come in and when to get out.
Yes, so you do get a lot of that indeed.
Yeah,
Yeah, our challenge is to calm the emotions down
yeah,
and work closely with our customers, which we do
yeah,
over a medium to long term, because
Yeah.
that's when you'll see real growth. As I say, markets don't go down in a straight line.
yeah.
So hopefully, we will see the end of this.
Absolutely. So the other day we went to Sanlam and we were talking to Ian Kirk and he was talking about his big picture vision of the company as well as where potentially things could go in the coming year. And I asked a question around the kind of issues that the markets have been dealing with and also the efforts that the government has been making and also the fact that, we went into a recession and now probably we're exiting that recession. And he then came back and gave an answer. And then I said, it was a very long way of asking a simple question.
Yes.
Is it time to buy? I'm putting it to you.
Godfrey, I think it's time to be careful, and careful means not to sell and not to buy without having a very, very informed decision.
Right.
So what I'm saying is, I'm deflecting the answer because I don't want to tell you to buy and then the markets go down further. No one knows. But what I'm trying to say is, be careful in your investing decision and don't panic. That's what I'm saying. Don't panic.
Yeah.
Don't panic.
Yeah.
Take advice and be careful.
Absolutely. Before you go,
Yes.
Tito, he
Yes.
came in and a lot of people were happy about his appointment and a lot of people also are hearing this coming through from the government, fighting corruption. In addition, Cyril has got this huge investment drive to try and create jobs. Are you enthusiastic? Are you optimistic when you look into the future?
Yes, look, if you look where we are today vis-a-vis where we were a year ago, it's certainly a better space. The most important thing for South Africa is to create jobs. We have to create jobs in South Africa. We've got to get foreign investment coming into South Africa creating jobs.
Yeah.
When you've got the whole world where foreign investors can choose from, they want to invest in an environment where they know that the governance is good.
Yeah.
So we have to get our governance right, and we have to attract that foreign investment into South Africa to create jobs.
Absolutely. Before you go, I've got to ask you about that dividend. The first time
Yes.
that you're paying an interim dividend,
Yes.
your investors must be happy. Stock up 1.6%.
Yes. We said to the market this time last year, I think I was even on your show, that we would be paying an interim dividend. Now that we've unbundled our proprietary assets, we don't have a need for surplus cash. So we're quite proud of the fact that we've gone out with 50% of last year's closing dividend at R1.70. So this year we're paying it at 85 cents interim dividend payable in February.
Absolutely.
First time in Peregrine's history.
Absolutely.